time to get started. Thank y'all for coming today. I'm Dr. Kelly OMD, your board certified OBGYN and healthcare executive, here to help you live your healthiest and wealthiest life. You have landed in the Ask Dr. Kelly OMD webinar, which we bring on subject matter experts to talk about one of our 5 pillars: spiritual, physical, financial, mental, and emotional. And tonight, the F is for financial. And we have a superstar with us. His name is Jamal Lofton. He is a strategic financial consultant. And earlier today, I asked you, what are you doing with your money right now? Well, Jamal Lofton is going to give us some insight about himself, the top 3 things he wants us to take away tonight, and then we're going to get started with a conversation geared just for you. Jamal, take it away.
Thanks, Dr. Kelly. I appreciate the opportunity, and thank you for your service and your leadership as a fellow veteran. I know you just recently retired, so congratulations on your retirement. You appear to be doing very well in your retirement. My name is Jamal Lofton. I retired about 8 years ago, Medical Service Corps officer. And during that time, during my military service, leading sailors, you get a bunch of questions about finances, life in general, and how do you navigate that. So I've had experience doing it kind of indirectly before, but in the past year, I've really honed in on becoming an expert at it and advising others as they transition out, or even if they're in the civilian sector already. So my top 3 takeaways for today that I want you all to have, and we're going to dive deeper into these 3 items, is one, and in no particular order, is one, take care of your family first. 2, create stability for your future. And 3, build a plan that fits your new mission. Whatever that mission may be, we need to build a plan to fit that mission. So those would be my top 3 takeaways, Dr. Kelly.
And you guys know I love a top 3. The reason why is because we are all about the bottom line up front. I want you to know what you're going to take away. We're going to talk to you about it, and then we're going to make sure you took it away from the conversation. So that being said, we're going to get started. Jamal, you know I have the first question as always. Now, while we're on active duty or we're in corporate sector, we have something called an SGLI, right? So we have our life insurance policy, or we've created a life insurance policy if we're in the corporate sector. Tell me why, when we're making these transitioning either out of the military or between jobs, that this may not be enough.
Yeah, great question. If you're in the military, SGLI is a great benefit during your service. But once you separate, it changes. It either reduces or it goes away. And you have to transition to something else. And it will be the same in the corporate sector if you have what's called a group life insurance through your employer. If you leave that employer, it goes away. And that's considered a term life insurance. And we'll go into that a little bit deeper as we move forward throughout this presentation.
So you're telling me it goes away, and when you transition, then you can go to another one called the Veterans Group Life Insurance. Do you have to take that one, or what's the recommendation? Because I'll tell you, when I was transitioning, even though I was sitting in those transition assistance classes, I was a little bit confused as to what I should be taking and why, and how much more money is it going to cost me?
Great question. So Veterans Group Life Insurance, also known as VGLI, is guaranteed acceptance within a certain window after service, but the cost increases every 5 years. It can be a good short-term option for those who may not qualify for private insurance right away, but is usually not the most affordable option long-term. I once had a client a couple months ago, had VGLI. We sat down and did a cost analysis, and we converted him over to a private life insurance plan, ultimately saving him thousands of dollars. That's right, thousands of dollars in the long term, converting to a private life insurance plan. So what I do, one of my jobs is to sit down, we'll look at all the options, but VGLI is not your only option. That would definitely be a takeaway that I would have for everybody on the call team.
And that's one of the things we try to make sure that we have in, Viva Life on these conversations. We want to be able to give you all the options and not just direct you to the one or another, because everybody's situation is different. And we want to make sure that you have, okay, this is my situation, these are the options, and these are decisions I can make associated with my situation. So I do have a quick question. How many people here, and you could just do like raise your hand with your chat box, how many people already have life insurance? Whether it be SGLI, VGLI, or private life insurance. How many people already have that? And we're going to be patient while you find that little button on there Yeah, so we have lots of people that are saying they already have something. So that is wonderful. And thank you for raising your hand too. So that is awesome. But what we want to do is we don't just want to have life insurance, we want to optimize life insurance. So there's life insurance while you're on active duty or in your corporation, right? And there's life insurance afterwards. And that's what we just talked about, the SGLI, the VGLI, and the private life insurance. Now, one of the things you said was a primary takeaway, and I wanted to make sure we get to those as well. Number one, you said take care of your family. Now, my Viva Lifers know I'm always gonna say there's an order. For me, it's higher power, self, then family. So that being said, why is taking care of yourself and your family so important when we talk about life insurance?
Yeah, great question. Taking care of your family and yourself. And I like your analogy, right? Because when you get on the airplane, you put your oxygen mask on first, and then you put somebody else's oxygen mask on, right? So for a lot of folks on this call, you know, if you are a two income household, right? What happens if half of that income goes away through a traumatic life experience, right? Somebody goes away. Do you have a plan for that? You just purchased a new home, had a new child, kid goes off to college. These life experiences, what happens and what's the plan for that? So that's why I really want to have this conversation tonight is to see like, hey, are you considering all of your options? We talked about SGLI earlier. I got my SGLI policy when I was 17 when I joined the Navy, right? So a lot of things changed during my time in the Navy. I got married, I had children, right? And I never went back and readdressed that right annually. So that's why we want to be able to put some things in place to have that protection.
Yeah, I think that's really important that you said that when you started it. And it's really unusual, like to be 17 and starting with a plan. Now, people in the
Mhm.
past have started with a pension plan, right, at 17, because they graduated from high school, they went into a job, and that's what they've been doing. And many people are moving around, but a lot of people don't know about doing that life insurance. And one of the things that we have been very adamant about is doing your annual health checkup. Well, a part of that annual health checkup is making sure that all of your insurances, your wills, your trusts, and everything is associated with that. So I think that, is really important. Now, in taking care of that family piece, though, we got to talk about what this life insurance is. People
Mhm.
mostly think about it as a death benefit, but it can also be a life benefit. So talk about the death benefit, and then we'll go into the life benefit.
Absolutely. So the death benefit, right, is exactly what it is. You have life insurance. Something happens, a person leaves this world, leaves this earth, and there's a beneficiary payout, right? Life insurance in a nutshell. But then you have different types of life insurance that cover different things. So at a minimum, life insurance has a death benefit. Somebody dies, beneficiary gets paid. And then we'll go a little bit deeper into term and whole life, Dr. Kelly, whenever you're ready. But that's pretty
Yeah,
much what happens with the death benefit.
absolutely. Now tell me about this term and whole life, because when I was about 20, 30 years old and I was listening to Susie Orman and,
Yep,
all Dave Ramsey and all this other stuff, all I wanted to know was
yep,
when I could spend my money, and they were trying to help me like save the money.
yep,
But tell
yep.
me about like the term and the whole life insurance.
Got it. So term insurance, think about that as temporary coverage, right? So we talked about SGLI, VGLI, your job, group life insurance. Those things are gonna go away once you leave the service, once you leave the job, right? They're temporary. Most temporary life insurance plans range anywhere from 10 to 20 to 30 years, and it's highly affordable, right? Provides large death benefit, is great for specific goals like covering family while kids are young and paying off your mortgage. Then you have whole life insurance, which lasts your entire lifetime. It also builds a cash value over time. And I want to emphasize that whole life builds a cash value over time. So think of it as building your own bank as well as having a death benefit, right? Where you can access that money for emergencies, opportunities, or retirement. Is both protection and a financial tool. Now, whole life insurance is a little bit more expensive, right? Because you're building a bank. But we'll talk about the pros and the cons about that a little bit later. But that's the primary difference between term life insurance is temporary, whole life is for a lifetime.
And I think, when I was first talking to my financial planner and he was like, so we're gonna do this and we're gonna do this. And I was like, hold up, hold up, hold up. How much money am I spending? Just hold up. So when you talk about term, yes, it is definitely more affordable when I think about a couple of $100 a year versus a couple of thousand. And when I say a couple, I
Mhm,
mean a lot of thousands a year.
mhm,
Term is a couple of hundred, whole life is typically a couple of thousands. But let me tell you, when it came time to buy a home, open a business or anything like that, that whole life insurance made a huge difference. And I was so excited that I had that
mhm.
that in place because tell me the benefits of the whole life insurance. Let's start there and then we'll talk about, the downside.
Absolutely. So, like you said, whole life insurance, you build that cash value. You're basically building the bank. So as you accumulate that, you can access that money. And I want to highlight Circle Star, right? You access that money tax free, right? When that money is pulled out, it is tax free on a whole life policy. So important things like if you're getting married, like you said, putting a down payment on a house, buying a house, traumatic life experience, you can pull money from that whole life policy and still have your death benefit, right? You can't do that with a term life insurance policy. Term life insurance policy really, for lack of better words, somebody has to die, right, for that term policy to pay out, right? So you're going to pay into the term policy, it's going to be a lot less money, but when that goes away, it goes away. The whole life, you can access that cash and do a lot of things with it tax free, no questions asked.
I love that. So I'll be honest with y'all, and I'm looking at the chat as well. So just let everybody know if you have questions, you can start raising your hands and putting your questions in the chat. So I was able to, I had a duty station that I had to go to, and I was able to purchase my home, at least put a down payment on it because I used my whole life policy. Now you do got to pay it back to get the death benefit. Is that correct?
Well, great question, right?
Okay.
So you get some options with the whole life insurance, Dr. Kelly, and that is an amazing point that you just brought up. You really have two primary options of which you can use with whole life insurance. You can take a loan, which sounds like that's what you did. You can take a loan from your policy, right? And just remember that's your bank, right? So you're taking a loan from the bank that you've already built up, because it accumulates cash over time. But then you can also pull direct cash from the policy. Now it's going to reduce the death benefit, right? Almost dollar for dollar, but you do have that option to pull out cash, not a loan, right? So those are two options that you have with whole life insurance that you wouldn't have with term life insurance.
So I love this because when I came to a friend of mine and said, you know what, I think I'm going to open a federal credit union or a bank. I want to be my own bank. And he was like, yeah, you can't do that. And when my financial advisor told me about this, I was like, showed you, didn't I? So the point of the matter is, yes, we can do different things with our money as it's gaining interest, right? That compound interest that we all talk about, it's gaining interest. We're able to put the money away because, if you don't put it somewhere, you're going to spend it. And
Hmm.
then you're also able to utilize that, especially right now. I mean, when interest rates, how were was it 8%, 9, 10%? And you're talking
Hmm.
about taking out a loan of your own money for like 4%. I think that for me, that was a no-brainer at the time. So I'm really excited about that. All righty. And then next direction is as far as you said, Jamal, one of the things that has come up with having family members with or without life insurance, and unfortunately most of them don't, funeral costs. Now,
Yes.
I'll tell you that I didn't do my research when my aunt died and she had an annuity and my family needed the money quickly. And I was like, well, just turn the annuity over and give it to the, funeral parlor and they can do whatever they need to do with that. Of course,
Mhm.
like 2 days later, I saw a video like, don't do that. So tell me about the
Mm.
funeral benefit and how we should actually utilize the benefit so that it can be most helpful for us.
Yeah. So, I mean, funeral costs, that can be covered through whether you have term policy or whole life policy, or what I've actually worked out for a lot of clients is just a small policy, right? Funeral today can easily cost $10,000 a month, right? Life insurance proceeds can be used to cover the costs, so your family doesn't have to worry about writing the check during an already difficult time. But we can also develop a small policy, a $20,000 whole life policy that's relatively cheap, that will cover funeral expenses and final arrangements.
Now, how would you say, how old should you be when you do that? Like 20, 30, 80, 90? What should we be doing?
Great, great question. The younger the better, right? And I say that because it's insurance, right? So there's underwriting, there are things of your health that is going to impact how much your life insurance costs, right? So if you're relatively young, healthy, your life insurance is going to be way affordable, especially if we're talking about whole life. As you get older, right, and we're all getting older, our clock is ticking from the day we're born, right? In the underwriters and insurance companies look at that, right? So everybody has a relative expiration date, if you will, right? So I would say the earlier the better. If you're a transitioning veteran, there's a high probability you already had life insurance when you were in the military, and I see no reason to not have it once you get out of the military, as well. So I would say the earlier the better. I work with a lot of clients that take out whole life insurance policies on their children, right? Because again, they're very young, it's relatively cheap. You have a 1 year old, once they turn 21, you can turn them over a life insurance policy. And like we talked about a couple minutes ago, they also have a bank in hand, right? Where they can pay for their wedding. They can make a down payment on the house or that add-do suite to your existing home, right? If you want to keep everybody in the house. So they can do really, really life-changing things like that with the whole life policy that was started at birth.
And I'm glad you mentioned the child because I think it's really important for us not to be afraid to put a whole life policy on our children if, you talk about it with your financial planner. Because the other thing, as you mentioned, that's going to help them buy a house. That's going to help them with their wedding costs, which we know don't make your wedding costs more than a mortgage, as well as, do so many other things. The other thing is, and correct me if I'm wrong, you can also use that for college costs and it doesn't show up on your FAFSA, correct?
That is absolutely correct. And that is an amazing point. Thanks for bringing that up. I get a lot of questions about, well, I have a 529. Why do I need to have the whole life insurance? And my advice is always, well, right, they're not they don't work against each other, right? It's not either this, it's not this or that, right? You can have both, right? Because as we all know, things are changing. The kids may not go to college, right? So now that 529 has to go into a different product, right? But you always have your whole life insurance in place because the one thing that I always want to stress about whole life is insurance, right? So it's the death benefit, right? That you may not see right now, but that's the thing that's later that's going to secure your legacy or make sure your family is taken care of when you're no longer here, right? The bank that you're having is just like an added benefit that is very beneficial to have going forward in your financial plan.
Okay. So thank you for that. And then you also somebody put a question in the chat, and for some reason it went away from me. So if you could retype that in, that would be great. Um, so you mentioned people that have spouses, significant others. But what if you're single? Like, why should I have insurance if I'm single? And when I pass away, everything's gonna go to one person or the other. Like, why should I set this up?
Yeah, great question. Again, like you're killing it with the questions,
Well,
Dr.
my
Kelly. I
people
love
lifers, they be throwing them at me. So I'm like, okay,
I
let me
love
get
it.
the subject matter expert in the room.
I love it. So if you're single, that doesn't stop you from having liabilities, right? Or maybe securing a family legacy, right? So what I mean by that, if you're single, you own a home and your home isn't paid for, do you want that home to go up for probate? If you die or you become incapacitated and you can't take care of that home, right? Or do you want that home to stay into the family or maybe gift it to a niece or a nephew or sister? Um, that's where whole life can come into play to cover those major liabilities that you may have if you want to leave a legacy. So that would be my advice to somebody that's single, or if you plan on starting a family, right, someday. And look, I got married, I guess what you can consider a little bit later in life, compared to my mother who got married at like 18, 19 years old. Insurance is just going to get more expensive as you get older, right? That's just how it goes. So I would say the earlier the better as far as like a life plan to have something in place. And you can always tailor it, right? That's why I always recommend annually we're reviewing your policy or your plan to see what's changed, right? So we can always address it and amend it as necessary. So that's what I would say to a single person. And oh, by the way, I've done a bunch of policies on single people well below 30 years old. right? So it is advantageous.
Absolutely. And you know what? If you're in Viva Life, not only you're going to, if even if you're single or you're with somebody else or have a significant other, we are building wealth here, and we want you to be able to leave that wealth to your family, friends, even a nonprofit. I don't know, LoganHeightsCDC.org. So I just want I just want to make sure that we know that, you know what, let's build. Or Xavier University of New Orleans, Louisiana. I mean, just build, keep building. So thank you for asking this question. Let's see. The question was how much, I was asking, what is the typical fee opportunity cost of a loan taken from a whole life insurance policy? So
Yeah.
typical fee is one thing, and then opportunity cost. So if you didn't put that money there, using it somewhere else, and what the opportunity cost. Let's start with the fees.
Yeah, the fees would be there's always an administrative fee, which is very low. It's a one-time fee, really. Um, you're talking about a couple percent, maybe 1 or 2%, to do that. But it's your money, right? So it's really just an administrative fee to pull that money out. But other than that, there are no additional fees. There is no taxes paid on that money from a whole life policy. It's really truly yours.
Yes, and in regards to, what you could be doing otherwise with the money, yes, you could put it into different vehicles. But what I will tell you is I have stocks, I have, ETFs, I have savings accounts just so you can have your money, available, mutual funds. We have CDs, we have life insurance term and a whole life insurance. And what I will tell you is, stocks, we know they go up and down. Those mutual funds, same thing. ETF, yes. The savings account, you might get some pennies on the dollars as far as percentage. But what I will say is that life insurance policy has gone up and up. Now we have had to switch companies that we've done life insurance with because they've changed the platform or modality into
Hmm.
more of a stock, like more of stock than rather what it is as far as that life insurance. So that is something that with a financial planner, with somebody like Jamal, you'll be able to have those conversations. So thank you for asking that question. Next question. Could I not build a bank by investing the difference between a term policy and whole life? Why mix my savings, investment, and insurance? Oh, good question.
So could you repeat? You're saying, could
Sure.
they, yeah, repeat that one more time, please?
Yeah. Could I not build a bank by investing the difference between a term policy and whole life? That's the first part of the question. Second, why have a mixture of savings, investment, and insurance?
Yeah. So for the first one, it sounds like, are they asking, can they build a bank through term insurance? Is
It sounds like they're asking the question, and maybe if you want to come off mute and ask the question, but essentially, it costs money to have a term policy, it costs money to have a whole life policy. Why not just use an investment, via a different
mm,
investment vehicle or
ah,
something like that? You can come off
okay.
mute, Tiff, if you want.
So yeah, so I wanted to ask like about the difference in the cost, right? So
Mhm.
could I not invest the difference between the term, what I'm gonna pay for the term versus the whole life? Why do I want to mix the two? So it's not I
Ah,
build a bank, but like because it's so expensive to have the whole life, why mix my
mhm.
savings, my investments, my insurance, mix that into one tool versus having them separate when the term is so much cheaper and I could take the difference and invest it. So I guess another question is also like the rate of return on, the whole life versus if I did put it in just mutual funds or stocks.
Yeah, great question, Tiffany. And thanks, Dr. Kelly, for that. So I'll say this. The term typically so let's center on life insurance, right, and the death benefit, right? So that's really the primary purpose of the life insurance is the death benefit, right? So for example, if we did a term life insurance today, is relatively cheap. Let's say for example, it costs $50 per month. You're relatively healthy for $1 million life insurance policy. So you have that in place, and that's 20 years. The primary reason why folks do that is to cover major liabilities, right? So if you own a home, you just bought a home, you have a car payment, you have young kids, right? The term policy, what I've designed for a lot of clients, that covers those major liabilities that you have. Because if something happens within those 20 years, your family is covered, your legacy is secure. So that's what I would say about the term. And then when that term ends, ideally the house is paid off, the kids are grown, the car is paid off, all your major liabilities are taken care of, right? And the term is gone. Now what, right? I would say you still need life insurance, right? That's we're talking about securing a legacy, leaving something to your family, paying off final expenses and things of that nature. That's where the whole life comes into play because that's never going to go away. That's always going to be with you. And not to compare it to other vehicles like mutual funds and stock options and things of that nature. Those all have a play within your financial portfolio, but the life insurance is always centered on the death benefit that you're going to have from day one once you pay your first premium for your life insurance policy. Hopefully that
Thank
answers your question, Tiffany.
you. Thank you for answering that. And I would just add there, when my aunt, who'd never had any children, passed away, she was a woman that had an eighth grade education, had saved every penny. She was born in like 19, let's see, my grandma was 1908. She was like 1915, I think it was. And
Mhm.
she died with over $1 million. And so she was able to give each one of her nieces and nephews money so we could start our lives. And that came right at the time where I was going to finishing up college, going to med school. And then also another one of her sisters who had never had children passed away. And that happened when my husband and I were talking about buying our first home. So imagine, even if it's $5,000, $10,000, imagine that this person who scrimped and saved every single thing she had but thought enough of her nieces and nephews to, yes, 1908. I know. Thought enough of her nieces and nephews to think about putting something away so that we could start our lives and we could be successful in our lives so we didn't have to start at ground zero. And so that's how I think of it going forward. Is like, okay, I can do this for the next one because I'm going to put the money somewhere anyway. But that's why we're having these conversations. So great question. Let's see. Does your VA disability rating affect your life insurance? Oh, that's a good question.
Great question. Um, Not directly. I would say not directly. And what I mean by that is they're two totally different systems. Because you could have a VA rating that, you have a bad back, right? Or you get migraines. That may not impact your life expectancy, right? Which is what underwriters would be looking at. So I get this question a lot, right, from veterans because they're almost afraid to apply for life insurance because they may have a VA disability rating. Look, you can reach out to me or any agent, right? We can run what that looks like for you, and you can basically get a quote of what your life insurance would look like based off of your current health conditions. I say that to say, don't let the VA disability rating scare you, and no, it doesn't directly impact your life insurance approval.
I love that question, love that answer, and absolutely, we are take Viva Lifers and guests. We make sure that we take every opportunity to optimize our financial wellness and well-being. So, as you all know, I am retired. I have a rating. I have life insurance, and neither one of them affected the other. So, go ahead, go forth, be prosperous. And that being said, I know we're essentially at the end. It goes by so fast. So
Oh,
Jamal, if somebody wanted to get in contact with you, or if somebody had their one last question, it's burning question, I need to know the answer, go ahead and put it in the chat. But Jamal, please tell us how to get in contact with you. If you have your information, drop it in the chat. If not, we will definitely send it out or put it in the chat later.
absolutely. Yep, I can put it in the chat, and I am on LinkedIn. I'm pretty active, so you can find me. I'm should be the only Jamal Lofton on LinkedIn. Please reach out to me. More than happy to answer any questions. Consultations are absolutely free, right? If you want to sit down, talk to me, we can go over what makes the most sense for you and your family. I would be happy to do that. And we can sit down and chop it up, and I can give you some numbers, and we can look at what makes the most sense for you and your family. But I would definitely put my information in the chat. This is going by so fast, Dr. Kelly. My goodness, questions were amazing. And happy to help you all in your journey as you transition or you're looking for other options to secure your legacy.
Awesome. Thank you so much. One burning question that just came through. What do I do with my TSP? Do I keep it in the TSP or do I roll it over?
Look, we didn't even get to that. My goodness. Okay, so the TSP. Look, we can talk about that as well. I would recommend you roll it over, because if you don't, it's gonna sit there and pretty much be in a management account, right? It's not gonna grow at the clip that it probably would grow if you roll it over. So if you have a TSP, I would recommend you sitting down with somebody like myself. We can look at some options to roll it over so that money can work a little bit better for you. And if you have existing IRAs out there, we can talk about consolidating those into one account, to make that a really good manageable vehicle for you all going forward.
Thank you, thank you, thank you. How did everybody enjoy this? Is there anything that we missed? Did we give you your top 3 priorities? Remember, we want you to know to take care of your family first, create stability for your future, and build a plan that fits your new mission, whatever that mission should be. Jamal, I think you kicked it. I think you did it. I think you did it. I think you did it. So thank you, everybody. Awesome. I'm glad to see our Viva Lifers, our new friends, our new Viva Lifers. Once you come to more than 2 events, you become a Viva Lifer. So I see some faces. Y'all Viva Lifers now too. So thanks for being a part of this. We really appreciate you. Follow me on drkellyomd.com. Go and click on all them icons. Every single YouTube video is already posted. And we always want you to live your healthiest and wealthiest life. Have a wonderful evening. Viva Life. All right. Thank you for being a part of the Viva Life experience. I'm Dr. Kelly OMD, board certified OBGYN and healthcare executive. If you like what you heard, then please go ahead and like, share, and subscribe. The reason why is because we are trying to educate, encourage, and inspire 1 million people to live their healthiest and wealthiest life. And this is what we're bringing you. We're bringing you educational videos. We're bringing you podcasts. We are bringing you webinars with subject matter experts, including myself, about the topics that affect you the most. So go ahead, like, subscribe, and share. We are everywhere. Have a wonderful day. Viva Life.